Hello, it's Adil bringing you a intermarket analysis perspective of the U.S. markets for the start of April, from what I can see. We are looking at a new month, a new quarter. Let the trading commence. Okay, so the U.S. markets from an intermarket analysis perspective. Where are we going? How do we interpret all the fundamental currents and react, obviously, how they are reacting with all the cross-market relationships. So let's start. Okay, fundamentals first of all. Miss Yellen obviously was neutral towards the end of Friday, although the markets were embracing her cautious approach. She did sound, from my perspective, overall, I think we already know that there's hikes. The market's psychologically prepared now for hikes. So the fact that and it's also factored a potential hike in. From my understanding or my perspective, she sounded dovish. From my understanding, okay, and my perspective, the way in which I was reading it, I certainly did interpret her commentary, her insight, very similar to the comments last week or the week before, basically, where she was interpreted as being dovish as well. And obviously, the U.S. markets had a short squeeze rally. I mean, I can read some of the quotes courtesy of @LivesQuote for you. Fed's Yellen US rate hike may well be warranted later this year, which we already know. Hence the reason why the US markets are spooked and obviously moving lower. Okay. Progress on Fed's inflation goal notably absent. That's definitely dovish. Okay. Yellen, modest increase in rates highly unlikely to halt progress on jobs. Okay, you can interpret that as hawkish. Certainly interpret that as hawkish. So the next one, before raising rates, must be reasonably confident inflation heading towards 2%. That's interpreted as dovish. Okay, and it contradicts and counteracts the previous comment. Okay, not prudent to postpone rate hikes until on verge of 2% inflation. Again, a grey area. Okay, it could be interpreted in multiple ways. Would be uncomfortable raising rates if wage growth, core inflation, or inflation expectations weaken. So again, she is explaining to you that if the inflation rate starts to fall, which a lot of individuals are interpreting as deflation all over the globe, then there is no rate hike. So can you see how these comments are contradicting one another and basically attempting to, from my perspective, attempting to talk the dollar down. That's what the whole aim is here, okay? Before they actually raise rates, the markets have already factored in and discounted a rate hike, and Miss Yellen's whole attempt is to obviously neutralize any strength in the dollar. That's my understanding of things. Now, the daily chart now at the moment, although we have held previous resistance equals support, we do have a potential here for a bear flag scenario, as we can see here, and obviously the next move potentially being lower back into this 1175 region on the dollar index. So this is something that we certainly need to observe and watch very, very carefully. That's basically something that I will certainly be observing as well. Okay, so that's something that we certainly need to keep an eye out for. Okay, with regards to the dollar index. Okay, I understand, so bear that in mind. Okay, now the other factor as well at play here is the US data that came out, the barrage of data that came out late or afternoon Friday. Basically, we had German imports, obviously inflation data coming higher than expected, import prices coming higher than expected, and the inflation data certainly supported the euro. That's one of the reasons why I had to exit my swing euro short position. As you know from the FX Street interview, I was swing short on the euro USD. Now the core consumption data, USD core personal consumption data, came in line, and the GDP data more or less came in line quarter on quarter. So, and adding the fact that you had higher consumer confidence or Michigan confidence, then that basically bodes well for the dollar, and that certainly helped the dollar obviously move tick higher, and that was under the factor of closing the euro USD short. Okay, so you have Yellen that was basically one could interpret it as hawkish or dovish, but I would consider it neutral given her contradictory remarks. Then we had the economic data out of the US that came in line, so that certainly helped risk. And then we had the The Yemen situation in the background, okay, with the Saudis building a coalition of the willing or not so willing, call it what you want, basically to attempt and suppress these extremists in Yemen. Okay, that caused the Prime Minister there to flee as well. Okay, so the uncertainty regarding Yemen and obviously the impact of oil prices or potential for a higher oil price and the net bearish effect that could have on obviously the markets. And it's just mainly the uncertainty and the fear that's surrounding geopolitical concerns. Then we have socio-economic concerns such as Greece. Now there was rumours that there were going to be capital controls imposed on Greece, even though they've handed in their a letter or their list of reforms, 18 reforms from what I understand. But the situation isn't looking good because we had a lot of negative headlines, and any talk of capital controls is interpreted as being bearish. Okay, so that's the situation that we have. So you have Yemen, geopolitics, you have socio-economics such as Greece, the uncertainty regarding that, and the wild card there. And obviously, if you're interpreting Miss Yellen's testimony again or a commentary late Friday as being hawkish, then obviously that causes the dollar to rise and the commodities fall, and we all know what happens next. Okay, so Yemen, Greece, and Yellen. Okay, obviously US data as well, and they'll be the three overriding factors for the price action for next week. So now that we know all the fundamental currents that are running through this market at this very moment in time, the next obviously our job is for us to actually assess the technicals. Okay, so let's move on to technicals now. So first of all, I'm starting off with a Wilshire. Not sure what's happened there. Okay, so let's go to our daily chart first of all. Let's try and assess this. Okay, so we've had this key diagonal trend line. We're just about holding on to that. We're holding previous resistance equals support. So I would presume the Wilshire based on TA was certainly into support, and that needs to be respected in the interim. 60-minute chart, obviously we are holding that double bottom support, so that must be respected. Obviously we've broken out this rising channel and the market's flushed quite substantially, but the main concept is that we haven't put in a lower low, so that certainly needs to be respected. And this can obviously be seen on the 10-minute chart. Now the pattern that I see straight away on the 10-minute chart, I'm not sure if you can observe this as well, is you have the inverted head and shoulders. This is a Wilshire 5000, generally a good gauge of US markets and the strength there. This is indicating a thrust higher, therefore bias remains on the upside for US markets based on that information. So one could state that Greece was resolved, Asian markets are higher overnight, the concerns or the proposals are accepted, and there's some positive statements coming out of Greece. Miss Yellen's obviously testimony or Miss Yellen's commentary on late Friday is basically interpreted as being neutral stroke dovish, given the fact that you had stronger economic data which states that the market can sustain itself, is a positive sign for the markets and the situation in Yemen. And the situation in Yemen certainly comes under control and is neutralized, and there's no additional bearish information or rhetoric coming out of there or in that region. Then that issue gets played down, and that obviously creates a risk on environment, which will trigger the inverted head and shoulders formation on the Wilshire 5000. Okay, that's the scenario on the backdrop that I would like to see. Okay, let's move on to the Dow now. This is an important index I generally tend to observe, if I can find it. Okay, here we go. Okay, so the Dow daily chart we will always start off with. Okay, holding the horizontal resistance and holding this key diagonal trend line, therefore indicating support. 60-minute chart, let's observe. Okay, 60-minute chart has held double bottom, is building a base, no lower lows, therefore one must respect this. Okay, and we are looking for a potential move higher. Okay, the 10-minute chart of this Dow we can certainly observe as well. The Dow index, again same concept folks of the Wilshire. Can you see how they're all aligning together? And we have this inverted head and shoulders formation pattern. And what does that indicate? A move higher. Okay, so that must be respected. Okay, so the Dow Transports, we can always cross-reference that. Daily chart has held horizontal support. Okay, so if I just get rid of this horizontal support held, 200 MA held, very bullish. Okay, and we are looking for a potential thrust higher now. 60-minute chart. Okay, horizontal support obviously is being held. That certainly must be respected. 10-minute chart, same type of pattern. The whole concept is this bear flag has failed to play out. As soon as this bear flag is negated, i.e. the upper channel or upper body, then you are looking for a potential short squeeze up to 200 MA. Okay, so that must be respected from that perspective. Okay, so the Dow is certainly bullish. The Wilshire 5000 certainly is being interpreted as being bullish. The next one we move on to now is going to be the S&P 500. Again, that's if I can find it. Okay, in all these variables, it is a task. Okay, makes you go cockeyed sometimes, folks. Okay, what I generally do is I split it over 3 screens. Unfortunately, on this occasion, it's not allowed. I can only show you one screen, so it's a shame. Bear with me whilst I just bring this up. Okay, world indices. Surprised the S&P isn't there. Okay, so S&P 500. Here we go. S&P is there. We just need the Russell now. The IWM and the IWN. So bear with me. I did have them open, which is a shame. iShare Russell ETF. That's the one. That's that. Okay, everything else seems fine. It's just the S&P that was missing. So that hopefully has been added on now. Okay, here we go. So the daily chart of the S&P 500. Again, we had this key horizontal or diagonal trend line. We have triggered below it, which is a concern for me. Okay, and again, let's just give it the benefit of the doubt. Innocent until proven guilty, and let's see if it can recapture it. But it certainly is a warning sign from that perspective. 60-minute chart for the S&P 500. Again, it's important and imperative that we understand here that the 60-minute chart didn't actually go back and test that low or make a new low. And that's very impressive, okay, and that generally indicates a potential short squeeze coming from my perspective. But for now, we have to respect the price action on the daily chart. Given the fact that it's broken that key trend line, it's a cause for concern. Now, given the fact that you have its counterparts or its peers basically all indicating the same pattern, there's a very, very high probability of this trade setup playing out to the upside. So basically, I'm looking for 2080, 2075, etc. on the upside for the S&P 500. So looking for quite a positive and a bullish thrust higher on the S&P 500. Okay, so S&P 500 chart is bullish. I need to cross-reference that with the ETFs or the IWM. In other words, the Russell 2000. Okay, so let's just observe this. On a daily chart perspective, okay, we obviously have bounced from here. There's no real support that I can see at all in reality at this very juncture. Nothing that I can see. Okay, daily chart certainly remains vulnerable. 60-minute chart, yes, we've held the 200 MA, although we do need some concerted effort on the 60-minute chart because we do have an unfilled gap below. Okay, so 10-minute chart isn't exactly as bullish as the rest, and this certainly is indicating weakness, so I would be certainly very cautious with regards to this chart. Okay, let's go to the next one. iShare Russell. That was the IWN. This is the IWN for Mike now. Okay, so the daily chart of the Russell again indicating weakness. No real bounce of support realistically, other than the fact that we've got this trend line here, and that's probably the only one that's holding. Okay, 10-minute chart at this very moment in time. Again, it's not as bullish as the rest of the charts. This is showing me that potential sideways, or it could just follow the S&P 500 from that perspective. Okay, so the Russell, the small caps, large caps are not exactly bullish. The only positive thing that I can take from there is that they've not made a lower low, so therefore potential sideways to a bounce. But the S&P 500 certainly is poised for a bounce and a move higher. Okay, right. The next move or the next variables that we must observe is the Nasdaq. So I can bring that up for you, giving you an insight on the Nasdaq, and then hopefully we can come to a conclusion. Now bear with me. It's my charts are a right mess at this very moment in time, and I'm surprised I don't have the Nasdaq. Bear with me. Okay, so I'm not sure what's been happening to my charts. Very strange. Okay, let's try and get this open then. Okie dokie. I can't even see it on there. Right, okay, bear with me. Not too sure what's happening here. It was Nasdaq 100 if I can remember correctly. I'm not too sure what's happening here with regards to my chart, so apology for the delay here. There we go, that's the index that I need. Okay, so what we need now is semiconductors, if that's even here, that is. Okay. Okay, so we've got the semis here. Very strange. Okay, I understand. Okay, let's just keep going anyway regardless. Very, very strange. Okay. Right. Okay, so the semicons is the one that I've got here. I do need to get that organized afterwards. Okay, I'll organize that afterwards. For now, I just have to play with this. Okay, so biotechs are there. Just need SMH now. Not sure why this is all missing. Sorry, folks. Okay, I'll get this organized afterwards, but it is a right mess at the moment. Okay. Right, the biotechs, obviously, as you can see in the daily chart, have bounced, so that must be respected for the interim. For the Nasdaq, okay. Now the next one is the biotechs. Okay, so we've already got the biotechs open. Okay. Right, so let's just focus on Nasdaq for now. Okay, so the biotechs and Nasdaq are into support. As you can see here, holding that 50% diagonal trendline resistance, support, should I say. The 60-minute chart of the Nasdaq, as you can see, is held at double bottom, so that certainly needs to be respected in the interim. And the 10-minute chart is indicating inverted head and shoulders formation as well. As you can see here, the whole concept is that we've not made a lower low. We're building this type of right shoulder pattern, looking for a potential propel and move higher. So overall, from a technical perspective, the US markets certainly seem to be into support and are looking for a potential thrust higher. As you can see from the S&P 500 and obviously the Wilshire 5000, the inverted head and shoulders certainly is active. On the S&P, you're looking at 2045 up to the head at 2070 region. You're looking at 35, or a 25-point move from there. So you're looking at 2100 from our perspective is certainly achievable. Initial resistance will be 2080, and obviously the next one above that. So the S&P 500 certainly has base from my perspective, provided obviously the wild cards, as we all know, Greece and Yemen predominantly, and Yellen obviously if she has anything to say from the hawkish perspective, and that will create a risk-off environment. So that certainly needs to be respected as well, folks. Okay, hope I've given you my insight and my obviously foresight and looking for a potential move higher. Everything seems set, provided the socio and geopolitical concerns ease, and Asia will certainly give us the interpretation of events come Monday morning. So risk on, risk off, wax on, wax off. Goodbye now.